I'm Jared Nelson from the Investing Channel, and welcome to The Spill. One of the oldest companies in America is having a renaissance. And with steel prices through the roof and unabating demand, U.S. Steel generated $4 billion in operating cash flow and $3.2 billion in free cash flow. Per share, that comes out to $15.26 and $12.21 per share, respectively. Right now, the stock trades just above $22. Basically, with all the cash the company generated last year, if it pulls off the same feat this year, it could buy back all its stock. That's why we're surprised that financial pros only searched for this stock 128 times in the last month, less than half the searches for Cleveland Cliffs. And that's not to say Cleveland Cliffs is a bad stock at all. So in case you didn't know, U.S. Steel was the nation's first $1 billion plus company. U.S. Steel Corp. Was started by J.P. Morgan and Andrew Carnegie more than a century ago and became a symbol of industrial America. The company was added to the Dow Jones Industrial Average on April 1, 1901, the same day it began trading on the New York Stock Exchange. Fast forward to July 1, 2014, and the company was removed from the S&P 500. Today, the company has benefited from skyrocketing demand for steel, sending prices for the gray metal up across the board. And despite a recent sell-off, steel prices for hot-rolled steel and all other steel products really remain at historically high levels. With the infrastructure plan passed in the U.S. and a push to build more domestic manufacturing capacity, we expect steel prices to continue to remain high even if China's economy falters. When we look at U.S. Steel's financials, it becomes plainly obvious that the higher sales prices helped push operating margins to historic levels. And with the high amount of cash being generated, management reinstated a modest quarterly dividend while planning to spend nearly $500 million on stock buybacks. Lastly, it's worth noting the $2.522 billion in cash on the balance sheet against modest long-term debt of $3.863 billion. Now, comparing its valuation ratios to its peers, in every category, U.S. Steel is the cheapest or tied for the cheapest. The P/E ratios looking at the last 12 months and forward are insanely cheap. On the growth side, U.S. Steel doesn't necessarily have the top metrics for revenue or EBITDA. But then again, this isn't a high-growth industry. It's driven entirely by supply and demand. In our opinion, this is a 9 out of 10 ranking stock. We love everything about U.S. Steel, and as long as the steel price remains elevated, they'll continue to generate oodles of cash. Our ideal stock price is $20. Click and subscribe to the Spill newsletter to get the full breakdown.